Good morning, Simple Trading Life traders, premium members. Good to see everybody. We'll be getting started here shortly. Market will be opening in about 5 minutes. And I see we have a few of you on already, and we'll see if we get a few more joining us. But excited to get the week started. So let me switch my screen to screen share. Bring up the market. As you can see, what's already happened this morning here is the ramp on the Fed news that they would offer unlimited quantitative easing. So we got this huge ramp. We blew right through this little minor supply zone right here. In normal conditions, you would expect to come up here, maybe bounce, and then go higher. Because of the news, it blew right through it, got up here to the stronger supply area. And why do I say it's stronger? You'll notice that we have a drop, okay? Then we rally, base, and drop. So we have a rally, base, drop, which is always stronger than what we had here was a drop, base, rally with just one little spinning top. Again, if conditions would be normal, we would expect to see a little bit of a bounce there and maybe go higher. Okay, but we just blew straight through that. We came up into the stronger zone. And as you guys already know, it's now going even further. So far out of this zone, we're probably well over $100 now. Just to the bottom of this candle was 81. So the pullback is probably close to $100. Let's look. 22.89.75 so far, and the high was 23. Yep, so it's already over $100. So out of this supply zone, we've already pulled back over $100. So we've got just a little over 3 minutes before the market opens. Let me get you guys pulled up on my phone here. Give me 1 second. Once I get you pulled up, then I can see your comments. Once I get you pulled up. Good morning, Sonny. Good to see you. And as usual, I always have your comments on my phone, so I don't have to keep switching screens. So it says we've got 3 of you in here right now. So welcome to everyone who is here. And obviously we got about 2.5 minutes to get going. In the premium room, I showed you guys a couple of alerts that went off on Forex overnight. And you guys can see how powerful those are. I'm going to continue to play Forex this week. Primarily, I'm not saying I won't take any equity names, because if I see something set up that I really like, I will, just like I did with GDX and a couple of other names over the past couple of weeks. But always just looking to make the most high probability plays possible. And here recently, over the last 2.5 weeks, that for me, that's been primarily in Forex. So I'm going to continue to watch that and probably trade that. And I'll obviously keep you guys alert and awake when it comes to those kind of things. As my alerts go off, I'll notify the room, and if they happen here in real time, we'll go straight to them and kind of see how they're playing out. But we'll be looking at all that here in just a minute. Good morning, Al. Good to see you. So as you can see, we're continuing to sell off out of supply here. Now, obviously, once the market opens in a little over a minute, that can change, right? You know, retail traders might flood in and still be euphoric over the Fed news and try to push it up. But this is what we expect, right? We get into a strong area of supply, we expect to see a bounce. So we've already seen a bounce out of there of well over $100. And you know, I kind of made a comment about the safer plays. Obviously, when you get a ramp like this, when it's occurring, you have no idea where it's going to stop, right? It could have stopped here, we had an idea that it would probably stop here, but the pullback is the safer play, right? Because it makes sense, especially after you get all the way up here, that you're going to probably exhaust for one reason, and second of all, you're hitting a strong area of supply. The pullback is probably the safer play. Well, I know it's the safer play. I shouldn't say probably. Okay, so we're getting ready to start. So I got to put my new lines in. So where did we open up? We opened at 2279.50. 2279.50. Oh, I got to get the right tool first. Okay, so far we're actually selling off. We'll see how long that continues. 22. So let me get my opening price level set. We do this every day. Change it to a dashed line. Make it purple. And there we go. Okay, so that's our opening price level. I'll be able to watch that. Okay, so far, moving to the downside. We'll see if this continues. Obviously, we're only just a little over a minute into the market, and we'll be floating around looking at a bunch of different stuff. So don't worry about that. In fact, if there's anything you want me to look at, just let me know. Type it in the comments. Just seeing what the market's going to do here right out of the gate. Like always, let me go over and look and see where the premiums are at. I'm sure they're probably high. So let's look at the premiums. Whoops, I went too far. Yep. So just for one contract, it would cost you about $5,000. If you see that $57, that means $5,700. These are options, so they're extremely high. Premium is extremely high right now. Or obviously, if you don't play options, you can play standard contracts, but they're also fairly expensive as well. Okay, we're going down, but as you can see, it's not like we're completely selling off here. We've already made a big move down though, right? Before we ever open. From here all the way down to here. Probably, let's look, 2247 from 2386. So that's almost $140 from right there to right there. So big move down already, and you can see prices starting to bounce back up. Obviously, if we reclaim opening price level, then we'd look to see, can it get through here and can it go higher, or are they going to continue to try to sell it back off? We created new demand on that ramp this morning. Okay, so right here, we created new demand. Is this the absolute strongest demand level? No, and I'll show you why. Okay, you see how price all night long just sort of chopped and ranged, even though it was going slightly up. Okay, we did have a little bit of a dip and then the big rally. But again, what we would like to see is either a strong move down, base, and a strong move up, or a strong move up, base, and a continued strong move up. Those are your strongest zones. So what makes this zone here stronger than this one? What we just talked about. Okay, so this was a base, drop, base, or excuse me, drop, base, drop, and we just had this little spinning top in here. What makes this zone stronger was we had a rally, base, drop. Those are always going to be stronger zones. So we had a rally, base, drop here compared to a drop, base, drop here. Okay, so we can see that price is trying to reclaim the opening price level. We'll watch and see. I'll tell you what we'll do. We'll set our alerts like normal. I'll set one up here, and then I'll set one below where we've been, and then we can always come back and see if price starts to make big moves one direction or the other. So I'll put one down here just in case we take out the lower part of the candle. Thinkorswim is moving extremely slow this morning. That's why I don't trade off of that platform anymore. So we have our alerts set. Now we can start looking at other things. What I was going to say is I brought up Interactive Brokers over the weekend. I did download their platform. No, I didn't put any money in the account or anything yet. Trying to get familiar with it. The only reason I would even consider it, I do have friends that trade on it. I have some friends that really like it. I have other friends who trade on it and they're like, it's okay. It's a very robust platform. I mean, it has a lot of tools, a lot of stuff. But what interests me is that you can trade any instrument in the world out of one account. So you can trade equities, you can trade futures, you can trade metals and commodities, you can trade Forex, you can trade it all out of one central account. So everything is right there. Like with Thinkorswim, you can basically trade everything, but they make you kind of segment, like, Forex is different. Right? So even though you can trade Forex on Thinkorswim, they make you have a separate account set up. You have to transfer money over there. You have to go to that platform and trade over there. Where on Interactive Brokers, it's all done through one central platform. So I'm going to just play around with it. If I feel comfortable, then I may look at trying it for a while, but I'll keep everybody up to date on it. But that's why I asked the question. I'm assuming nobody in here uses it because nobody responded to me that they did. One person gave a thumbs down and I asked them, I said, oh, did you try it and not like it? And they said, no, my thumbs down meant I don't use it and never have. So he didn't have any experience with it. As you can see, we are starting to sell down here, but we do have our alert set. We'll watch just a second here because it keeps moving down. And then we'll start kind of flipping around. Let's go ahead and we'll move around a little bit. Then we'll come back. Okay, so here we are on Apple. Once it comes up. All right, so here's Apple. Okay, we gap down. See this? And we're going lower. Looking over here at the advancers, we're in the 600s, which is extremely bearish. Let's go to AMD. Okay, AMD actually gapped up. Okay, so we have different there and then has sold off. So here's where it closed on Friday. Here's where it opened and it sold off. Okay, that's AMD. Okay, we just had our alert go off on ES, so let's go back. It's telling me that we're selling off. Yes, and we are. Okay, so we're almost down to the 2238.25 level. Oh, I see we got a few more people. So up to six viewers there. We have 7 in the premium room, so 6 of you are here. Nice to see you all. Okay, so we're already testing the 2238.25 level. Looks like we're trying to go through. Then we have the 20. Then we have this. This was newly created this morning, and as we were just talking about, if a few of you just joined us, is this the absolute best demand zone? Probably not. Okay, but we drew it in anyway because of this huge ramp. Again, what I would like to see, preferably, is you get a strong drop, then a base, then a strong rally. Those are your best. Your next best would be a strong rally, then a base, then a continued strong rally. So those are your 2 strongest. What makes this maybe not the absolute best is because how we just chopped into it and then shot away. Plus, we know this was artificially driven. It was a news event. Okay, now you still draw it in, right? You still draw it in, and we're going to get into it right now. So we're going to see, do we catch any kind of a bounce out of here, or does it break straight through? Like this morning, again, this was not the strongest area of supply. And those of you who just joined us, I already showed everybody else why. We had a drop-based drop, okay, which is strong. That's a strong move, and that's a strong move. But you see, we just have this little spinning top in here. You see that? Okay, so we draw it in because in normal price action, we probably would bounce there a little bit and then maybe try to go higher. But when we had that artificial news event, boom, we just went right through it. And we went up here to this strong supply, which was a rally base drop. Okay, you see that? Rally base drop, which is always going to be stronger. Okay, so we've got into it. We've bounced a little bit. You see this? All right, first touch. We're already bouncing. Okay, we would expect that, right? We would expect that. Now, does that mean that it's just going to totally reverse? We don't know that. Okay, but we would expect to see a bounce. We've seen a little one already. So we'll just, we'll kind of watch it and see what happens. I'm going to put an alert down at the bottom. So if we go away and start looking at other things, we'll know if it breaks through. And again, I apologize. Thinkorswim is moving really slow this morning. Okay, so we got our alert below. And then what I'm going to do is I'm going to also move this down to about maybe right about there. And then that way we'll know if price starts to reverse back up on a big bounce. Okay. So as you can see, as of right now, it's respecting demand. Down into it, it bounced. It's already been back up to about here. It's trying to push back down. Okay, but we're going to continue to look at other things and we can always come back. All right, so back to Amazon now. Okay, so Amazon, it gapped down, pushed up, and then has pushed back down. It's actually trying to go lower right as we're watching it. All right, this red line is a trend line. If I squeeze it in, you probably see it a little bit better. Now, actually, let me go to a higher time frame. That'll make it easier. There we go. Okay, so the red line is a trend line. I've left it on there even though we broke through it because we came back and broke above it. So now do we come back down, test it, and go higher? Well, we'll see, right? We'll see. Okay, that's the 4 hour. We'll go back to the 30-minute. We're just looking at various names right now. Let's, we'll skip over the Forex just for now because we're going to go back to Forex. Okay, what about BA? Where's my BA at? There it is. Okay, so Boeing. I was interested to see if Boeing got any kind of bounce out of the news this morning. They announced that their CEO and one of their board members were going to forego their salaries for the rest of the year. They're also going to, they're not going to do any stock repurchases or share buybacks because they're asking for a bailout. So this is the right, excuse me, the right thing for them to do. I'd like to see more companies do that. Okay, most people don't understand share repurchases, stock buybacks only benefit the company. So there are people out there that would like to see a law passed that says if a company ever accepts a bailout from the government, they should never be allowed to do stock repurchases again, right? Okay, now the reason there's a negative to that, you got a lot of companies, they'll set aside big piles of cash. Well, then they'll use that for these stock repurchases, which benefit them, instead of having that money in reserve in case something like this with the economy happens. So then they've used that money up, and then they have to go to the government and say, hey, can you bail us out? So that's just the 30-second version on why it's not good. But as you can see, nothing's really happening with Boeing this morning. Thought maybe they'd get a little spike on that news, but they didn't. All right, so let's look at BABA. We got one of our China names, big gap down, and then continued down into demand, got a little bit of a bounce. So now we're going to see what happened here. You have demand here, and you have demand here. the gap down actually was clear into the lower part of this demand zone, and it went right on through it. And then it caught this zone. I don't even have it extended. I should extend it over. Give me a second. Then it caught this zone here. And now we're going to see, can it bounce out of here? It obviously has bounced already. We just got here, so we don't know how high it bounced. It did bounce up. But is this zone going to hold, and is it going to start to head back up? If it does, up around here would be the next area that you would look for some area of supply, because you do have a base drop there, and that's a significant drop. Again, that's not your strongest supply zone, but when you're scalping and looking for short-term intraday trades, you still identify these areas because you can get small bounces out of them that can pay, right? I've been showing you guys that on Forex, how you can catch 30, 25, 30, 40 pips, which are great, just on these bounces out of, what might not even be the strongest supply or demand zones, but you just catch a few of those bounces a day, you're making good money. All right, so this is BABA. Let's look at Baidu, another China name. And what did we have here? Slight gap up, and then it sold down, and then it's pushing back up right now. I should extend this over. Obviously, when I drew these in, it was before price action had moved this way. So I got to draw them across. Get this drawn across a little bit more. Goes to the bottom of that wick. Okay, and I'll set an alert. Create alert. Needs to be below. If alert goes off, look to go long. Simple as that. Okay, there's the alert. Okay, I might not trade this, but again, you should get in the habit of doing this on anything you look at, and then you'll start to see these patterns happening over and over again. You'll see if the zones that you drew in are strong zones or weak zones, and it just gets you in the practice of knowing what to do. And then the things you do trade, you'll be ready, and your alerts will go off. You'll know you put your stop over here, just on the other side of this. You'll try to find a target. I'm just making something up, but maybe your target then would be this resistance level right here, which probably would be. Yep, if it bounced out of there, that would probably be a good target, which would be a nice move, right? It'd be about $9 move, and that'd be a great move on Baidu. Okay, so you just get in the habit of doing those things. Okay, Biogen. All right, Biogen gapped up. You notice, and I put this in the room earlier, this morning we had a good mix. We had some names gapping up, some gapping down, some flat. That's more of a normal type situation. Instead of these, one day we have almost everything gapping up, next day we have almost everything gapping down. Today we had a good mix of both, and you can see it just in the few names we've been through already. Some have gapped up, some have gapped down. So here we had a gap up where? Right into resistance. It tried to poke its head above, it couldn't. It flushed down, it's come back up, and right now it's still red. You can see that our advancers are dropping, they're declining, right? We were in the 670s just a little bit ago. We're down into the high 400s. Okay, we just had an alert go off on ES. So let's go back. I think we're moving up. Let's see where we're at now on ES. Oh, look at that. So we came into demand, and now we're bouncing back up, right? Now we're bouncing back up. So far, let's see what kind of a move we've had. All right, from 2 to okay, it should be 5-0. We were already up around this range, so about a $20 to $22 move on this bounce. All right, on that bounce. So again, I'm not interested in playing it because the premiums are ridiculous right now. Okay, volatility and premiums are high, but you can see demand zone. Look at this, first touch, and there it goes. It's going even higher. Now we're up to 22.50, which that'd be a $26 move. So we'll just kind of wait and see how this plays out. I'll put in another alert up here right around this level. Okay, let me put this one in. And then I will put another one down here in case it reverses and heads back down. And that way we can keep looking at other things. Gotta say below. There we go. Okay, so we've already seen, we've had like a $26 bounce out of there. Now let's go back and keep looking at some other names. Let's see, let's look at Beyond. Okay, there's Beyond. It gapped up and has sold down. Excuse me, gapped down. Here's where it ended. It gapped down and has sold down. All right, that's Beyond. Looks like we would probably have some supply right up here. Let's go to the left and make sure. Yep, this is fresh. All right, so if somebody's looking to scalp, they could draw this zone in right here. I'll show you. Whoop, I got the wrong tool. Got to switch back and forth. Got to get my rectangle tool. Come back over here. Okay, from the lowest point of this green candle to the highest point, just draw it across. A little bit higher, right about there is good. Make it pink. For me, you make it any color you want. I just always make them pink. I know some people make them yellow and blue. Some people, you know, whatever. You make them any color you want. All right, so that there, what do we have? We have actually, from all the way back here, we have a rally, base, drop. Okay, so that's what creates this. The reason I look to the left. This is something for you guys, and when I say you guys, meaning the premium members. Obviously, a lot of the free members are noticing how much that we play supply and demand and how much it works, how often it works. So I'm getting a lot more questions in there. And as I told the one person, Kelsey asked tons of questions about supply and demand. I told her the other day, I said, hey, I can't go too deep into it because that's not fair to the premium members. I've given those guys just a few basics, but something for you guys to know. Like, one of the things that I can tell she doesn't understand right now is what makes levels fresh and what makes levels not fresh, or why wouldn't you draw a level in somewhere. So if, let's say you had a rally base drop over here and it created supply, okay, I'm just making something up, created supply, and then this comes up into it and bounces out of it, right? Okay, so that would then cut that level off. You would not draw this level in. Okay, I hope you guys understand that. That's something that we'll cover more and more. So if you'd have like a rally base drop that creates supply, and then this comes up into it and then bounces out of it, it negates that. It would cut that supply off, and then you would not draw this level in. Okay, this would then not be considered a fresh level because what it was the bounce out of fresh supply. Okay, so that's why sometimes you'll look at a chart. I'm always telling you, look to the left. Sometimes you'll look at a chart and you may look and say, wait a minute, that looks like a great supply zone. Why didn't Scott draw that in? Or why didn't somebody draw that in? Or maybe you drew it in and price goes right through it and you're thinking, man, that looks perfect. What you got to do is you got to look to the left and make sure that you're not taking out fresh supply somewhere else. Because if your move is going up in there and bouncing out of it, even though this is a move to draw it in, this would be fresh. Okay, but if this move was taking out other fresh supply, you would not draw this in. All right, what you would do then is you would just keep moving on down or moving on up, whichever way you're going, and you find the next best level. So yesterday, I spent a lot of time. I was going through a lot of Forex names. I was drawing in supply and demand zones, and there were some charts I had to go way, way up or way, way down to find fresh supply and demand levels. So I set my alerts, and we might not get there for a while. It could be days, it could be maybe even weeks. You never know. But I'm not interested in the other stuff. Okay, will price chop around in between there? Sure. Okay, unless I'm playing strictly price action, which I do sometimes, right? I could play hammers, shooting stars, different patterns, things like that. Okay, if that's what I choose to do. But what I'm saying is, as I set up supply and demand on my charts, all right, this one is close to price. Okay, but sometimes it may be, way up here somewhere. It may be way up here for your next fresh level. So what you do is you draw it in, you set your alert, you draw your demand in wherever that is, you set your alert, you go on to the next chart. And you just keep doing that over and over and over. And then every single day, if you have enough charts marked, equities, Forex, futures, whatever, you'll have alerts go off every day. Every day, because you'll have so many things marked, and then you just pick and choose what you want to take. Some days you'll have all kinds of alerts going off, and you can't take everything. I always recommend, 1 to 3 plays. I don't like to be in more than 3 trades at once, because I get distracted. Hey, if you're one of those people and you think or that you can handle 5, 10, 15 trades at a time, okay, I've seen it over and over, people that think they can do it and then they end up blowing up their accounts, because what'll happen, I told you the story about the one guy I know who blew up his account. He used to have 15 to 20 trades going at once. Is if you ever have some kind of chaotic event, there's no way you can manage all of them at once. And that's what happened to him. And it caused him, we got Swissy yen, alert going off, so we're going to go there. But it caused him to blow up his account because he was in so many things, and there was a chaotic event, and he couldn't get out of the trades quick enough, and he blew up his account. Okay, so here we are in the Swissy yen, which will be the Swiss franc and the Japanese yen. Okay, why did the alert go off? Because we're nearing overhead supply. All right, we're nearing this. So what we're going to look for is it going to penetrate deep, or is it going to just catch a bounce and move out of here? Right? So what I'm going to do is I'm going to set an alert down here. All right, and then I'm going to set an alert further up in, and then we can come back and kind of see what it does. But this is real time. You guys are seeing this. I already had this preset. Okay, so now I have an alert up in here, and I have an alert here. Okay, you can see we're already rejecting just a little bit. Just a little bit. Let me try to bring this in closer for you. All right, there we go. Okay, we came up, it pulled back a little bit. It's coming up right now. But this is fresh supply. It's a big zone. It's a big zone. Okay, and I want to show you why. All right, strong rally. Here's our base. Strong drop. But our base is these candles right in here. Okay, I drew it all the way up to here. Really, it should be to this candle right here. These are your basing candles. Even though they're diagonal to the downside, these are your basing candles. This was your move up. This was your base. This was your strong move away. That's what creates this supply zone. Okay, but just as I was just talking to you about it, this is an alert I've had set for a while. It goes off, right? And then if this is something you're interested in taking, you do one of two things. You either take the trade immediately and figure out an area that you feel, your risk tolerance is safe. You set your stop, and then you start looking for take profit targets. Okay, if I was looking for a take profit target, probably somewhere in here. Okay, because up here we had a rally, base, rally. Okay, but we got these spinning tops in here. It means that it might not be the strongest zone, but I'm looking for a take profit area. Okay, so for me, plus you look at this, you have both moving averages right below here too. For me, it would probably be somewhere down in this area, somewhere down in here. Okay, but we have our alerts set. We'll come back and look if this is a trade. If this is a trade you want to take, you can obviously take it, and then just let me know, what you do with it. But as you can see, I've got my alerts set. I'm kind of all over the place right now, so I don't trade when I'm distracted. I let you know when I jump into things or when I jump out of things. So I'm just showing you. This may be something that somebody wants to take, right? You can see we just barely touched it. We've already bounced out of it. And I have my alerts set here and here. And this doesn't necessarily mean that somebody gets out of the trade. It's just telling me that it may be penetrating deeper into the zone, right? If you take the trade, you're either going to set your stop just outside of here, or maybe 75%, or maybe about 50%. Okay? Now you see it kind of came down. It's pushing up a little bit, but we'll come back. We've got our alert set. All right, let's keep looking at other names. All right, this is Crowd. See what Crowd's doing this morning. Okay, see Crowd gap down. We've seen a lot of names gap up. We've seen a couple of gap down. So it ended up here on Friday, gap down to here, and it's been going higher. You see right here, the two moving averages come together. Excuse me. That acts as support, right? You see, it's acting as support right now. Okay, and if somebody was looking to play it, what do we have to the left? We have this big wick over here. Okay, potential obstacle, right? So what would we be looking at if price started to move up? Anywhere in between here and here, it could reverse. All right, so that would probably be the top of a target level. Well, actually, it'd be before that. 51.97 is the top. Okay, the resistance level is 52.08, and that's based on previous price action. But if this would start to move up and somebody's playing this, okay, I'm just making something up. Let's say somebody decides they're going to go long if it takes the top of this candle out. In theory, there's not much there that would stop you. There's really not much here that would stop you. It wouldn't be until you got up into this wick right here that you would be concerned on an upside move of it then reversing. So then you have to determine, okay, is that worth it? Okay, so that would be 48.05, and then the wick starts about 50.01. That's about a $2 move, right? And even if you got, say, halfway up into the wick, it's almost a $3 move, almost. All right, so you would make your determination based on premiums if you're playing options or if you're playing equities. Okay, how many shares can I buy? Is a $2 to $3 move worth it? And you do those calculations in your head. You would obviously go back. Let's just go through as if we were going to play it. Okay, where are we at on the monthly? Okay, on the monthly we're red, but it's forming a hammer. Okay, you see this? We're red, but forming a hammer, so you keep that in mind. Where are we at on the weekly? All right, now which weekly are we really looking at? We're looking at last week because this is the start of a new week. So last week we were green, so start putting these together. We were red on the monthly, but forming a hammer, right? Okay, big green on the weekly last week, big green, even though we gapped down, big green. And then where were we at on Friday, on the daily? Okay, spinning top. So you just kind of put that all together in your mind, and then you make a decision, is this something I want to trade or not? Red, but forming a hammer on the monthly, big green on the weekly, and then a red spinning top on the daily. we gap down and we're going positive on the daily. Okay, you know where your supply is above? See that? All right, so maybe, and I'm just throwing this out here, maybe somebody looks at this and says, you know what? I'm not interested in going green until we take the top of this out, until we get over 5208. Now, we already know when we go back to the 30-minute that this is the big wick, right? Keep that in mind when you look at those higher time frames. You'll start to get used to this when you start looking at more and more charts and different time frames. That spinning top, this big wick right here is the top of that spinning top on the daily. You guys see that? So right there's your big wick. And again, you got to make up your mind. Is this kind of a move worth it for a scalp? Maybe it is, right? Maybe. And then if you're looking for a bigger move, right, you might, in your head, you might be saying, you know what, I remember on the daily, this is just part of a spinning top, okay? So maybe I want to wait and see if we can take out the top of this and then try to play it up to the supply zone. I mean, it's up to you, but those are the things that need to run through your mind as you think about taking a trade. All right, let's look at some other things. Let's look at Facebook. Okay, Facebook's not doing much. All right, gapped up, pushed down, came back up, and right now it's relatively flat. Okay, you can see that our advancers are starting to climb again. We got down into the high 400s. We're back up to the low 700s. All right, gold. Let's see what gold's doing. Pre-market, gold was up. Okay, it gapped up, sold down, and right now it's pushed back up. Okay, see that? Right here's where it opened. Right down here's where it closed. That's what I mean, pre-market it was up, gapped up, tried to sell down, but you see where they opened it was right above a support level, so you would expect that to probably hold at least early, and it did. So now we'll see, does gold continue up? This is GDX, the Gold Miners Fund. Let's go to the gold ETF. Okay, big gap up. Look at that. Big gap up, pushed higher, came back, has pushed up a little bit, still relatively flat compared to where it pushed to, compared to high of day so far. And we're only 37 minutes into the day. Okay, so gold looks to be up today. Now, is that finally a swap where people are so uncertain in the economy that now they're ready to start buying gold again in gold names? We'll see. Okay, one day doesn't make a trend, right? Because what has the trend been? The trend has been down just like the market, which is unusual. We talk about that each live session. Usually gold is the inverse of the market. If the market's going down, gold's usually going up. If the market's going up, gold's usually coming down. But gold has been coming down just like the market until recently. Okay, then it flattened out. See how it flattened out, and then today we got the gap up. So we'll just keep our eye on that. Gold may be something that we look at playing here in the future. Here's Google. Okay, Google, exactly the opposite, gap down. You see what I was saying about names doing different things? Some gapping up, some gapping down, some are flat. So it gapped down, flushed down, pushed back up, now it's going down again. Okay, right now we're inside. We use the terminology inside, and what does that mean? We're inside the previous candle. High and low of the previous candle, right now we're inside. If this is a name you play, you would be marking alerts here and here to see if you take out one side or the other. Okay, I posted it over the weekend, put it over into the lessons. Price action can really only do three things, but there is a fourth. And what are those things again? It can either go up, meaning it takes out the high of the preceding candle. It can go down, takes out the low of the preceding candle. It can go inside, which it doesn't take out the high or the low. Or the fourth thing is it can go outside, which means it takes out both sides of the candle. but in reality, it ends up as either a 1 or a 2. It either ends up or it ends up down. So if this came down here, took out the bottom, and then comes back and takes out the top, it ends as a green candle, which means it's technically up. But it's important to know that it's an outside candle, right? Why is that important? Because, well, it tried to come down and take out this side, but then buyers came in and pushed it back up. Vice versa, if it goes this direction first and reverses and takes out the bottom, it's a big red candle and it's a down candle. So it's the exact opposite. It tried to come up, sellers came in and pushed it back down. That's why outside candles, it's important to know what they are, but in reality, they end up as a 1 or a 2. They either end up as an up candle or a down candle. So those are the only things that price action can do. Okay, that's when I say I'm always looking at the things I know to be true. Price action, supply and demand, and support and resistance. Those are really the only 3 things you know to be true in the market. Okay, so that's why I concentrate on those things. I don't concentrate on indicators. I don't concentrate on fundamentals as much as some people. I don't ignore them, right? I don't ignore them. News can obviously move the needle, but typically price is going to end up going wherever it was supposed to go anyway, right? Doesn't matter. News will only temporarily move the needle. I hope that makes sense to everybody who's listening. Let's go back and just take a look, see what the market's doing. We have our alert set, but I just want to see what we're doing. Okay, so we're still right up here under opening price. Actually, what we did is we poked our head up there because I see the alert did go off. We poked our head up there, and then it's pulled back a little bit. Let me squeeze in just a touch. All right, you see that? I had an alert set right there. It did go off. I'll put an alert just above here, just above this hammer. Okay, is that a potential scalp? Absolutely. If you want to pay the premiums. If you want to pay the premiums. So I just put the alert in just above here. We have this nice hammer, right? So what did we do? Look at this. We went zone to zone, and look at the bounce. You guys see this? One touch all the way down here. So let's see what this move was. 23.86 to 22.18. I'm trying to do the math in my head. 16 minus 86 would be 70. So $168. Is that right? I think it is. $168. 23.86 to 22.18. Yeah, isn't that amazing? All right, so we just took out the top of this hammer right here. Okay, so that's a potential long, right, for a scalp. You'd put your stop somewhere nice and tight. Okay, in theory, where can we move to? Well, right up in here. Let's draw it in. Let's draw it in. Let me draw it across. Okay, make it pink. So for people who don't think supply and demand works, man, I just feel sorry for them. So what do we just say? That was a $168 bounce out of here, all the way down to here, zone to zone, right? Zone to zone. Then what did we do? Okay, we bounced out of here just on the initial bounce. 22.82. So 20, that'd be 60. So $64 on the initial bounce. And we're not done yet, right? Potentially, we're not done. Okay, if we can clear this and continue higher, I mean, this thing could end up being a huge bounce. Now, you know me, I only scalp, so I probably would have exited right up here. Okay, if we would have got up near this level or this opening price level, I'd probably already be out because I wouldn't want to see this happen. Okay, but are we going to come up here, come down, and go higher? Well, we'll see. All right, or do we reject right here? All right, this is a hammer, and that's a nice one, right? That's a nice one. So we'll just see. Let me move my alerts. I'll put that one there. That'll tell us if price starts to reject. And then I'm going to put this one up just above here. And that'll tell us if price starts to head on up. That's all we got to do, right? It's trying to go higher now. Okay, now look, there shouldn't be anything up here unless institutional money comes in and says, nope, I just don't want it to go higher. They could stop it and turn it around at any time. Excuse me. If they want, okay? But if they don't want, okay, here's your next supply level up here. So in theory, it could go, again, from zone to zone. And this one here, let me do this. Give me a second. Okay, because we've already bounced out of it, I want to shorten this up. Because I'm really only concerned with that original bounce. That's real, because those are your highest probability odds, and we play the highest probabilities. Okay, I'm not interested in lower probabilities. I want the highest probabilities. Everybody understands that, I'm sure. You've been around me long enough to know. Okay, I want to play the highest probabilities, not lower. Okay, we could come back down and catch another bounce in here. Yeah, we could, right? Or, I mean, in theory, we could come up here and bounce, and then we could come down to another level or another resistance level. Or we could come up here and bounce and just come down here to like a support level and then go higher and then get into this and then bounce and so on and so forth. All right, but I'm only interested in playing the highest probabilities. The highest probabilities come on the first touch of a new zone. Really, I need to move this back in as well. Okay, let me move this in. Okay, all I'm interested in is the first touch. Whoop. Why didn't that move in? There we go. Okay, so we get our first touch, we sell off, we come down here, we get our first touch, we bounce. Al, that's what I was saying. You could go long above the hammer here with a tight stop, with a fairly tight stop. I'm not personally. You might have missed that. I'm not, because the premiums are so jacked. I play options, and the options are just ridiculous right now. Again, I'll show you. Let me show you what they are. Okay, so if I was looking to play to the upside, if I wanted at the money, be $3,839, $4,000 per contract. Per contract for an options. Right? Now I could try to play out of the money, but even that's high. I mean, I could go 50, let's see, 30. Even if I went $30 out of the money, I'd still be paying $2,800 a contract. Okay, so I'm personally not interested in it. I'm saying if somebody is, okay, they could have tried to go long there. Now, right now, we're pulling back. Let's just say in theory, I would have went long, I'd be stopped out already. Because I would have, in this environment, I'd have a tight stop. You can always re-enter if it comes back up. Okay, so we just had the alert go off. Okay, my alert was set basically just under this body. So we're pulling back a little bit, doesn't mean anything. So if we're in a normal market environment, this hammer, no matter what this candle does, should be pretty strong. Should be in a normal environment, right? Maybe we get another one here. Maybe we can get another one here, and then we start to go higher. Okay, because we know out of this zone right here, There was a lot of strong buyers right here. Okay, now, are they used up? That's a question we have to ask ourselves, because we had this was on the Fed news, and basically we came up into supply, we got exhausted at the same exact time we hit supply, sold all the way back down here. We already looked at this. This was a $64 bounce out of here. Okay, so are the buyers just totally exhausted? We don't know. All right, we will know if this continues to go on and takes the bottom of this out. But if it comes down in here and holds and then starts to work its way back up, it may still go higher. Now that's a trade that in a normal market environment, I'd be okay with. All right, especially if you're swing trading. Now, I'm not swing trading at all right now in this volatility, but let's say somebody was swing trading. Swing traders are going to put their stop below this wick. They don't care how big it is, right? Because they know, again, this is in a normal environment, they know that that wick, even if price comes down in here, it's likely to hold and then price is likely to move on up. Okay, they're not too concerned right now. Now, I'm scalping and day trading, I'd be out of this already. Okay, so if I would have went long right there, my stop probably would have been right here under this body. And as soon as price came back there, I'd be out. And then I would just wait, okay? Is it going to come back and take the top out? All right, so let's put an alert right up here. Let's just move this down. That's all we got to do. All right, so if we get back to there, okay, right there, I put it at the top of this wick. If we get back up there, take that out, you can always re-enter right back up here. Gotcha, Al. I gotcha. Okay, and then same thing. Down here, I'm going to move this up to right there. Okay, we would be very bearish if it takes the bottom of this hammer out, which would be very, very unusual, but not in extreme volatility. Look, we had a hammer right here. Okay, we never really kind of took the top out and we sold off, all right, because it was part of this move to the downside from here to here. Then we get this hammer. We tried to go higher, and as of right now, it's pushing down, but we've got a lot of time to go. We've got almost 8 minutes on this candle, and when I say a lot of time to go, we got a lot of time to see is it going to move down here and try to go lower, or is it going to come back through and try to go higher? Okay, so we'll come back. We've got our alert set. Let's we haven't looked at Tesla yet today, so let's get down there. See what our old friend Tesla is doing. All right, Tesla had a little gap up. Okay, little gap up. Tried to flush down, came back up, came up to the 20, came back down. And as you can see, it's just flat, right? Basically 2 dojis in a row. So not really doing a whole lot. That's Tesla. Twitter. See what Twitter's doing. Okay, here's Twitter. So you can see Twitter came up into supply, never got out of it, came back down, came back up, came down, came back up. All right, so it's not doing a whole lot. This is not really a tremendous supply area. And again, it's because we don't have really a strong move up. We had a strong move down. That's why I went ahead and drew it in. Okay, see this? When you have a gap, that's the strongest move down you can have, or up. Gaps are the strongest. Okay, then the next thing are these big candles like this. All right, then the next thing after that would be if you had several medium-sized candles in a row. In order of importance, gaps are the best, wide-ranging candles are the next best, or several medium candles moving a distance away would be third best. All right, so coming into this drop, what were we doing? just sort of chopping around. Okay, this was a decent move, and then we chop, strong drop away. I drew it in. It held just barely. You see that? Just barely. Sold down to here, came back, sold down to here, and let's look. 23.52. The bottom of this zone is 24.44, so that's not even quite $1, right? Nothing really to be too excited about. Okay, so that's Twitter. Let's look at Shop. Okay, here we are on Shop. So Shop ended here, opened relatively flat, spiked up. Nice move to the upside, and now it's selling off. Okay, spiked up. So let's look. Open, 346, and it's currently at 369, but it was as high as 384. That's one heck of a move. 346. It was up as high as 384. That's almost a $40 move on Shop. Okay, Shop's a little deceiving, right? These candles look smaller, but that's because it makes such big moves. Okay, these candles aren't as small as you think. Okay, right there, that's a $7 candle. $7 candle. All right, Sonny says, let's look at Google. He sees a hammer on the 15-minute. All right, first thing I'm going to do, Sonny, is just see where we're at on the 30-minute, and then I'll switch over to the 15. Okay, so here we are on the 30. There was a hammer right there. See it? But we haven't taken the top out. We're inside. That's the 30. Now let me go to the 15. Okay, so here's the 15. Let me squeeze it in. Okay, there's the hammer on the 15. We still haven't taken the top of it out. Okay, our trend right now is to the downside. Okay, look how we're moving. Lower low, lower high, lower low, lower high, lower low, slightly lower high, lower low, lower high, lower low. Okay, so our trend is to the downside. We do have a hammer here. Okay, let's go back and look. Have we had hammers that didn't work before? Right here was one. That was way up at the kind of the start of this move to the downside. Okay, so we want to pay attention, overall context. Now, does that mean that you shouldn't go long if it gets over here? No, as long as you have a nice tight stop. Okay, but we have a wick right above. See this? We have a wick right above, decent size. That'd be your first obstacle. Try to get over that. Then you have your 20, and you can see the 20's been respected, right? Here, here, here. Okay, I'm just pointing out the things that are above. You have this wick, then you have the 20. Then if you got above that, it would be this wick here. All right, now that'd be a decent move if you got up there, but we just don't know, right? We don't know. Until you take that out, right there, I wouldn't be interested in anything. And even if you were, I'd be very cautious, tight stop, and just protect yourself. Okay, I see your comment there. So you're just, like I said, just pay attention to what's going on around you. Right? If we go back to the 30-minute, you're going to see something similar. Right? Okay, overall we're moving down. Okay, occasionally you have these spikes to the upside, but overall we're moving down. Came up here, moved down. Let's get in tighter. Okay, have this hammer right here, but so far we haven't been able to take out the top. Then up here would be the 20. Okay, this is on the 30-minute. Okay, so right now, just me personally, I wouldn't be interested in Google, but you might on that 15-minute if you get above that hammer with a tight stop. Okay, that's totally up to you. I'm just saying I wouldn't be interested in it. All right, DPZ for my man Sonny. DPZ, which I believe is Domino's. Yep, Domino's right here. All right, let's see what we're doing. Okay, I'm on the 30-minute here. Okay, 30-minute, we gapped up, we flushed down, we came back up, we're moving higher. I don't have any lines drawn in because I don't typically trade this, so let's go ahead and draw our lines in. You guys will see me do this. Go to our line chart. Get our price level tool, which is this one right here. We'll start at current price. There's current price. Okay, so we're going to start right here. We'll start putting these lines in. Up here. And down here. And up here. Okay, over here is our high, 374.48. I got to edit that because it's not giving me the exact number, but you don't have to have the exact number, but I know what it is, so I'm going to go ahead and put it in. All right, and let's move this way. We'll look for some downside numbers. Okay, I'd ignore most of this. Maybe right here. Let's keep going a little bit lower. Whoop. Yep, that's fine. Let's go lower, see if price moves down. Let me get this off of there. I was probably doing something for somebody because I personally don't use fibs almost ever. Okay, where are we at? So right about here. Right here. I'm not going to draw too many more in. Right here. And like right here. All right, that's enough. Switch back to candles. So we're going to go through DPZ just like it was a brand new, I'm really thinking about entering a trade and how I would look at it. Okay, so here we are. Big gap up. We flushed down, came back up, pushed higher right here to resistance. Okay, right here to resistance. So right now we've rejected it. We haven't broken through. We also have the 20 right there. Okay. If it does break through, what are we looking at for the next highest area that would make sense? Okay, maybe right in here. Maybe right in there. Okay, definitely right up here, 344.23. Why? Because it's rejected there before. All right, now it rejected before it created this. Okay, so that would be sort of a zone. Maybe not the absolute best, but we're looking for a highly probable area. So you would start at the bottom of that and draw it across something like this. Okay, to the high of that wick. Make it pink, for me at least. Okay, Swissy, JPY. We just had an alert, so we're going to go check that out. Okay, so I would be, if it breaks and holds here, shouldn't be a whole lot that would stop it from getting up here into supply. Then I would expect to see some sort of bounce the other direction. Okay, you see that there, Sonny? Then to the downside, you would be, let's look. I got to squeeze this in just a little bit because we got to know what's over here to the left if there is anything. I got to go to a higher time frame. All right, so looking over here to the left, Okay, that's the 4 hour. I'm just making sure there's nothing over here that we got to worry about. Back to the 30 minute. Okay, because what we're looking for, right, is a demand zone down here. Okay, the strongest one is probably going to be right here. Just draw it across. Okay, because what did we have? We had a drop, base, rally away. Now, you could catch some right here, right? You could catch some right here. So let's just say in theory, we came up here and we bounced and we start heading down. The first thing I would be concerned about is this hammer right here, this big wick. Okay, so like somewhere in there. Then if you got through here, now you may bounce, come down here, bounce, turn around, and then go lower. Then you would be looking right in here, okay, because of this. And ultimately, this would be your strongest of the demand zones, okay, because we had a drop, base, strong rally away. All right, so Sonny, I hope that helps you. Okay, we got to go look at the Swissy JPY. Because we just had an alert go off. Okay, so my alert was, remember I put this alert up here, right about here, to let us know if we were going higher into the zone. We are. Again, that's nothing to be worried about. That's just keeping us alerted to what we're doing. Okay, I told you, this is a big zone, right? This is a big zone. We had this strong rally, base, strong move away, but because these candles up here are so big, it creates a big zone. Now this is one, again, in real time, I'm not so sure I would have been anxious to just jump right into it because of how big the zone is. I don't like having my stop that far away. Let me tell you. It's a big zone, 75 to 15. 75 is 25 and 50. That's a 40 pip zone, 40 pips. Okay, for me, that's too big. I don't like stops really more than about 20, right? So that's why I wouldn't be super excited until price leaves here. So if price just stays in here anywhere, I don't care if it's up here or if it reverses in here, I would be more interested when it leaves the zone heading back down. And then down in here, as I showed you before, down in here would be a likely area that it might catch some resistance. And then ultimately, you could even look lower. Okay, but because I scalp and day trade, let's say this left and I entered, I would probably be looking to take profits somewhere right in here. I don't know what you mean by import my charts, Sonny. I don't know what that means. You can screenshot them, right? You can just screenshot them when I post them. I don't know what you mean about importing them, but you can definitely screenshot them. Okay, so I'm going to set an alert right here. So if it leaves, and I'm going to put a note here. If price leaves this zone, look to go short. Simple as that. Okay, you see that? So if price reverses anywhere in here and trips that, it'll give me an alert, it'll give me a note, look to go short. And then this here, this was a level where you could say, hey, if you just want to, take some quick profit, or, again, down in here would be an area that I would think price might come in and take at least a temporary bounce, maybe go lower, right? Just because of all of this right in here. Just because of all of this. Or you could even exit like here, like before you get to all of this. I mean, that's totally up to you. All right, let's go back. We haven't looked at the market here in a little bit. See what we're doing? Okay, just still hanging out. Remember what I said? It's quite possible we hang out within this hammer for a while. Let me scroll in. Okay, here's our hammer. Okay, we poked our head above, but we came back in. We ended up as a spinning top, which is indecision, right? This one is still, it's just barely lower than that, and then it's pushed back up. Now, if this comes back and takes that out, that'd be something to know, right? Because we barely took out the bottom of this. If we come back and take out the top of this, that would show some strength. But remember what I said, this wick right here, it wouldn't be uncommon for us to spend quite a bit of time inside of it, right? And we're still inside of it. Gotcha, Sonny. I just saw your comment. All right, now let's go down through and look at some Forex names. Okay, here's the Aussie CAD. Okay, here's the Aussie CAD, and you can see it's doing a lot of whipsaw right now, a lot. Okay, so since it left up here, came here, bounced down to here, that would have been a nice scalp, right? Came back up, reversed down, and it moved all the way down to here. But would that have been easy to trade? Look at this, up and down, up and down, up and down. That'd be hard to trade, okay? That's why we set our alerts and we look for these kind of moves. These are the kind of moves we want to be involved in. So let me look at something here. This, if we get back up here, this would be an area that we want to watch. Make it pink. All right, then I'll set an alert right here at the bottom. That's where I'm going to set my alert. And what's it going to say? I'll just make it simple. Look to go short. Because I'll know, I mean, that's what I set my alerts. I type out all that information more for your benefit. For me, I'm just saying look to go short, look to go long. Right? If it's demand, look to go long. If it's supply, look to go short. Because as soon as I have the chart up, I'm going to see everything that's going on the chart. Okay, so if we get all the way back up here, we created this, right? This is new. How do we know that it's new? How do we know that it's fresh? Because this one got taken out right here. Really, let me show you where this should be. That should be over there. Okay, there was our first touch. We sold away. That would have made a nice scalp right there. Would have made a nice scalp. Came over, came back up, created new supply. And how did we create it? Rally, base, drop. Okay, rally, base, drop. Created this. We really weren't interested in this because of what I showed you, all the whipsaw. Now we've come over and we're working our way back up. Okay, here's an area that we want to look at. Right here, right? Because why? Drop, base, strong rally away. So let's mark it in. I'm not even trying to be exact. I'm just getting it close to the bottom of that wick. All right. So either way, if we come up or come down, these are the areas we're looking at right now. Right now. I mean, there's even the potential right here. This is not as strong as this, but it doesn't mean that we can't catch a little bit of a bounce. We might get up here, bounce back down a little bit, then come up and hit this stronger zone and really bounce down. For now, I'm going to leave it the way it is, but I can visually see on here that this is the potential across there to come up and maybe see a bounce. But the two strongest areas we have right now are here and here. Here and here. So let me set an alert, because once we get off of here, I probably will look at taking some of these. So here, this is how I do it. Look to go long. That's it. And again, when my alert goes off, I'd come to this screen, and the first thing I'm going to see is what I see here. And I'm going to say, okay, makes sense, right? This is my nearest area of demand. It would make sense that we'd see some sort of bounce out of here. This is my nearest area of strong supply. It would make sense that we see a bounce out of here. All right. Aussie Swiss. Okay, here we are on the Aussie Swiss. Look how nicely this played out. This is, I believe, the one I put in the room overnight, from overnight. That was 4 o'clock in the morning. Look at that. First test. Okay, so this alert would have went off first. Okay, from here to here was a trade. And then first test here, down, and probably to the 20. I probably would have looked at getting out like somewhere around there. I wasn't awake at 4. I didn't get up until 6 something this morning. So both of these alerts went off overnight. But you can see, let's say they went off during the day. We get down in here. We leave. You can maybe enter when you leave. You take your trade here. Now, same thing. It leaves here. You pick out a target. Let's just say it's the 20. You get down there. You exit. Then you wait for the next trade to set up. Okay, so I already have an alert. Here's my next supply above. Okay, this was just created. Is it the best? Maybe. Maybe not. Okay, we had a decent move down, but these are small candles leading into it. Strong move away, but you know what? I am going to go ahead and draw it in. Okay, so from here across, and I'll set an alert. I just do this over and over and over. And again, when I'm not on with you guys, this is what I'm doing. I'm going through chart after chart after chart, setting these up. Okay, so I know what to look for. Okay, and simply look to go long. There we go. So I have an alert here. I have an alert here. So no matter what price does, I'm ready. Look at a few more of these. Let's look at Aussie USD. Okay, here's Aussie USD. All right, now on this one, again, this zone shouldn't be here, right? Everybody can see why this shouldn't be here, correct? Why? Because this was the first touch. I just haven't looked at this chart yet this morning. So let's get rid of that. Let's do this. I got to squeeze it in more. Okay, there we go. You always have to, once it's been tested, you need to cut it off. Okay, because it's no longer, and this is case in point. Let's just go through this. This is why I cut them off after the first test. They're no longer reliable. The odds were in your favor here. Look at that. Look at that move. Okay. Your odds were in favor here on the first retest. Here's where it's created. We move away. We come back. First test. We sell off. Okay. That, and I probably would have exited right here around the 20. I probably wouldn't have caught this all the way down here. Okay. But you guys see that. So you cut it off because now when it came back up in, you see it went right through it. Went right through it. All right, but what did we do? We created an area right here. So let's draw it in. So we'll have it for the future. Just draw it across here. There we go. I'll set an alert. See how easy this is? This is how easy your trading should be. This is how easy your trading should be. Look to go long. Takes all the emotion out of it, takes all the guesswork out of it, right? Now, if you want to trade real small, they don't necessarily have to be small, but if you want to trade, scalps in between zones, that's where you use price action. That's where you use support and resistance. Okay, that's what they're for. Okay, if you're trading these higher probability plays out of supply and demand, you're just going through your charts, marking everything, putting your alerts in. You get there, you determine, is it worth getting in now, or do I wait, let it bounce out? If you see it bounce immediately, let's say it gets here and it starts to bounce immediately, then I want to get in immediately. But if I see it start to penetrate, then I want to wait, make sure it doesn't go all the way through the zone. And then as it leaves the zone, that's where I want to enter. Okay, then I'll place my stop over here. Okay, so I hope that makes sense. Let's look at Euro USD, which is obviously the most popular instrument in the entire world. Most heavily traded. Okay, so here we are. And again, this, I just haven't had a chance to update this yet. This should have been cut off way back here. Right? Way back here. Because there's your first test. There's your first test. We didn't get much of a reaction though. That was our first test, and then we went right through it. Then we came down, down, and then up. Okay, so we look to the left. Nothing really jumps out. We had a drop, base, rally, so maybe we're going to draw something in right here. I'll show you. Okay, right through here, down. I want to go to the lowest part of the base, even if it's not a red candle. Okay, so for now, I'm going to extend this. Give me 1 second. For now, this is our next level below. Set my alert. Just a process that you just go back and just keep doing it over and over again. Look to go long. Alert is set. All right, now if I scroll back in, okay, if I scroll back in, you can see how I've got everything on here. So look at this. I'll just show you. Okay, I have to extend this one across. Created supply, we left first touch of demand. I don't even know if I can go all the way back over. I probably can't because I'm on a 30-minute. Okay, but I know it's the first touch because I cut it off. First touch of demand. Okay, up here we create supply. First touch, sell off, right? And we created supply on the way down. Come up, first touch, sell off. First touch, sell off. Over and over again. See this? Come down, first touch, bounce. That's a bigger bounce than you think. Okay, then we came up, come down. We've created this over here. We're now working our way back up. Now, I will not draw a zone in here. Why? Because this took out this. Remember way back at the beginning of the live stream, I was telling you, okay, these are the little nuances. So even though this is a rally-based drop, I do not draw in a zone here because this is taking this out. So you do not draw a zone in there. What I need to do is extend this zone across up here. And I'll do it here right now. Okay, 109958. 109958. I'll go in and adjust it. Make sure I have it where it goes. I already have this set to alert me to go short if it gets up there. That's how easy it is, right? And this Euro USD, it's just prime example of how it works. Okay, over the weekend I was telling you about trends. So the reason trends are important in supply and demand is what I told you, right? So if you're in a downtrend, you can play both ways, up and down, but if you're in a downtrend, your bigger moves will be to the downside. You see this? Look how big they are. All right, come over here, big move. Come over here, big move, big move, big move. Then we'll eventually change and we'll start working our way up. In an uptrend, your bigger moves will be to the upside. Again, that does not mean, look at this. That's a nice trade, right? That's a nice trade right here. Zone up to here and then back down. I probably would have exited around the 20 SMA, but you see, that's still a nice move. Down here, up, that's still a nice move, okay? So you see, you can play both ways no matter which way the trend is going. But if you know, like right now, we know we've been in a downtrend on Euro USD, the bigger moves are to the downside. So when you bounce out of supply and you start heading your way down, those are typically going to be bigger moves. Okay, a couple more minutes and then we'll wrap this up for today. Let's go back and look at the market. No alerts have went off, so I'm assuming not much is going on. Nope, we're still in this wick. Okay, starting to move down, but we're still in the wick. See? There's the wick. Told you it could be a while. All right, there's the wick. We're still inside of it, here to here. All right, trying to work our way down, but we have our alerts set here and up here. So if we take this out, then we start thinking, okay, we could really see some downside. Squeeze it in. Okay, look to the left. If we take this out, is there a lot that could stop us? Well, we have this wick. We have these two wicks right here. Then after that, there's not a whole lot. There's not a whole lot. I want to be careful here because, again, I do not like to do any kind of predictions or anything like that. If we get down here and like take this stuff out, I think it's highly likely if we get down here and take this stuff out that we drop to 2085. But I'm not predicting that. I'm not, I'm just saying based on price action, we take this wick out and we take these two wicks out, the odds start to increase that we could drop all the way down to 2085. Okay, who would have thought of that 3 or 4 weeks ago when we were up near 3,400? Does that not just blow your mind? But that's how quickly a correction, a crash, whatever you want to call it, I like to call them corrections, that's how quickly that they can occur. Now, I also have some other reasoning for thinking that we may eventually get down here. Whether that's now, meaning today, tomorrow, this week, whether that's in a week or two. I think it's likely that we'll probably test this level. And that doesn't mean we'd stop there if we started that way. If we started that way, it doesn't mean that we'd necessarily stop there. I'm just saying, I'm giving you probabilities. I think it's highly likely that at some point we might test this level, the 2085. Okay? And especially if we take this out and take these two out. Okay, because look, is there anything after these two wicks? You see something like this, there's no wicks whatsoever. Come over here, okay, if I draw the line, all right, we're basically above, or excuse me, these wicks are above here. So this wick and these two wicks are sort of the last kind of stumbling blocks from letting price just drop. That's not necessarily a good thing. I'm not saying it's a good thing at all. I'm just saying it could be highly probable if those occurrences happen. And I'll go ahead and show you, I'll show you another reason why I think we probably will test that area. Okay, but we have to go to SPX to do it. And then we got to go to a daily. Probably could do it on a weekly too. Let me see if we can do it on a weekly. Yeah. In fact, I already have it drawn in. Okay. You see that? Broadening triangle. See this? That's another reason I think we're likely to test the 2085 area. Yeah, Todd Father's absolutely correct. The limit downs and the occasional limit ups that we get, and that's what they're put in for, is to protect from absolute plunges or, spikes that just go on and on and on, especially if they're artificially driven. Okay. That's why they put those in place. But what he's pointing out is absolutely correct. Last night, we could not go below a certain number, right? Because it was limit down. So when you go limit down, you can only go up. It will not let price go down. So that's why, if you guys remember, I can't remember how long, but let's just say it was 20, 30, 40 minutes, whatever it was. Price didn't move because nobody wanted to buy to take it up at that point. But then at some point, buyers came in, and overnight price slowly, it was chopping, but it was slowly melting its way up. If we wouldn't have had limit down, we could have seen this last night. We could have just absolutely got below that stuff and just plunged last night. So Todd Father, you're pointing out a great point, but can you guys see the broadening triangle right here? You see this? That's why I'm saying at some point, doesn't have to be today. At some point, I think it's likely that we get down here and test this 2085 level. Okay, now let's say it's several days from now, it could be lower than that, because then the broadening triangle, let me squeeze it in. Okay, if it was several days from now, it could be even lower. It could be over here. Now that'd probably be more like a week from now. But if it happens in the next day or two, you see where it intersects right here with 2085? Okay, again, I'm just looking. I'm just using common sense. Doesn't mean that it's going to happen, right? Doesn't mean that it's going to happen, but I'm just trying to put probabilities in my favor. Now, I'm probably not going to trade it because the premiums are crazy. But if we did get down here, then would it be likely that we take a bounce? Well, it just depends. Okay. Would it be likely? Probably. But would that bounce be permanent? Don't necessarily know. Okay, but you see here, you see the broadening triangle formation. We went from here, kind of came over, then we came down, we bounced, we went all the way up, now we're coming down. Now if we touch here, that really confirms it. Okay, you can't draw it until you have 2 points. So here and here, here and here is your 2 points. Confirmation is when you get a third. So if we would get down here and then bounce off of it and start the other way, that's your confirmation. So I'm just showing you what runs through my head and, kind of looking into the future a little bit to just see if we have something that could be likely. But there's things that have to happen for us to get down there. That's also why I don't get super excited. Okay, I got to go back to ES, I'm sorry. That's why I don't get super excited when we get these artificial ramps on news. Okay, what did I say this morning in the room? Be careful. I think I said be very, very careful. because this is not real. It's not. Okay, now somebody may say, well, heck yeah, it's real. It went up. What I'm saying is the reason that it went up is not real. Okay, the reason that it went up was because the Fed and the government is desperate, and they're this morning, all they've been doing is pumping out what they think is positive news. They're trying to stop this. Let's go back to the 4 hour. All right, that's always our big look here at where we've come from. Okay, they're trying to stop this. They're doing anything they can to try to stop this. So this morning, they knew we were likely to gap down because of what had happened over the weekend. More and more states are going on lockdown. More and more countries are going on lockdown. Businesses are starting to, collapse and lay people off and all this. So they come out this morning and they say, hey, we're going to have unlimited quantitative easing. Okay, unlimited. We'll do whatever we got to do to make the economy good. Okay, that's what started the spike. Then they said that they were going to be offering 30-year bonds, a lot of them, a lot. It was in quotes, a lot. So those are loans, basically. What else did they say? Oh, we fully expect the economy is going to really ramp as soon as these shutdowns are lifted. Really? You think it's just going to be that quick? Okay, come on, use your head. We are going into a recession. Don't let anybody fool you. The entire global economy is going into a recession. It's not when they lift these shutdowns and these lockdowns and these quarantines. The economy is not going to just all of a sudden, in the snap of a finger, turn around and everything's going to be, rainbows and roses. That's not going to happen. So now if we go back, let's go back to the 30-minute. That's why I said be very, very careful on this. Because this, now you see what I'm talking about, is artificial, right? That was not created by normal market conditions. That was created by a news event. Where did it stop? It stopped right in a strong supply zone for two reasons. Number one, it probably would have stopped there anyway. But number two, you get these big chaotic candles. What do I always tell you? What is the risk? What is the most likely thing that's going to happen? Exhaustion. Okay? So then we got this first bounce down, which was $81. We created supply on the way. It bounced right back up into the supply, and then we've sold off all the way down to this zone. We got a bounce up to opening price level, and so far we haven't been able to hold this bounce, and we're fading away. Now, until we take this out, there is still the possibility this could turn around. All right, but this was so predictable. I mean, I hate to use that word. So let's say likely or highly probable. This was so highly probable because this wasn't real. This right here wasn't real. And all it does, and that's what I try to keep telling the room, so they look at the market objectively and they look at what's happening in the future objectively. You can't listen to what these world governments are saying right now, because they're all going to say these things to try to ease your fears because they want the market to turn around. They want the market to turn around. So they're going to say whatever they have to say. And they're going to do things that in the short term seem like they're good, like this unlimited QE. Okay, it's not good. That's not good. That puts our economy in a worse position in the future. Worse, not better. They're trying to put a Band-Aid on a gushing wound that blood is just spurting out of, and they're just trying to put a Band-Aid on there. They're not doing surgery and stitching it up. They're just trying to stick a Band-Aid on there for now. All right, eventually, the things they're doing now are going to cause more problems down the road. Then they have to take corrective measures to fix those problems. That's why I'm saying the recession is inevitable. We're going to have a global recession. Now, that doesn't mean that that affects us, because there's going to be great opportunity on the way down, when we bottom out, and on the way back up, because we know what to look for and we're not stressed out about any of this stuff, right? How often do we recognize that this kind of stuff's going to happen? You guys have been with me long enough. How many times do we recognize this stuff ahead of time, right? Wasn't I in the room? Wasn't I just saying, be careful, be careful. Don't think that we're going to just continue on up. And we've sold off, right? And what have I been saying all the way down? Back to the 4 hour, okay? What have I been saying all the way down? Okay? All the way down here. Ignore these little spikes to the upside, right? Ignore them. Ignore them. Okay? Because they're just part of the downtrend. You'll know, again, way back up here was where we had the chance. Right there. That's where we had the chance to turn this around. We had to break above. You can see we did break above, but we couldn't hold it. Then we double topped, and then we just sold off. Right there was our opportunity. If we would have broke above and held and started making higher highs and higher lows, you wouldn't have seen all this stuff here. We couldn't do it. And I know like this seems like I'm ranting, and I am a little bit, but I tried to warn everybody, right? I tried to warn everybody. I said specifically, as this started, I said the worst thing that can happen is you get to a point where the bulls start to give up. And I'm talking about in the bigger picture, they start to give up. They start to quit fighting. And then that's what happened right here. Right here was their chance. And when this happened and they double topped and it started to sell off, they basically gave up at that point, and that's why we came all the way down here. Then we made a little move back to the 20, and look at that, sold all the way down here. Then we made a move back to the 20, then we sold all the way down here. Move back to the 20, you see the pattern, sold all the way down here. Here, we actually broke above the 20, and then just total collapse. Boom, big flush. Then here, spike up, and we're already headed back down. So I'm just trying to help you guys be smart and think things through, use common sense over anything else. Use common sense over anything else. Okay, look, we're still going lower. We're starting to get near the bottom of this wick. Starting to get near there. Okay, does anybody have any questions? Does anybody have anything they want me to look at before we get off? We've went over a little bit. We try to get off sometime between 10:45 and 11, but I just wanted to show you guys that so you know you guys can start thinking that way and you don't get fooled by this kind of stuff, which I don't think you do because you're here and I'm warning you about it. But I want you guys to be able to think for yourselves, and when you see stuff like this happen, you'll know, all right, wait a minute, this doesn't make sense. All right, this doesn't make sense right here. Okay, I need to be cautious. Right? I don't want to go long. I don't want to chase and then have this come right back in my face. Okay, the pullback. That was the safe play right here. That was a safe play. The bounce right here. The bounce, that was the safe play. This was not safe, and all it did was create more chaos. Okay, anything else? I haven't seen anybody type anything in. All right, guys. Hey, I love being with you guys in the mornings. Tomorrow is Tuesday, so tomorrow we'll be on the YouTube live stream, and then we'll be back with the private live stream on Wednesday. So if you guys have anything throughout the rest of the day, just let me know. I'm going to be watching mostly, obviously I'll watch the market, But I'll be watching mostly for my Forex alerts to go off. I'll let you guys know if I jump into anything personally. But this is what you need to be doing, just what we did today. As you go through the different charts, mark your zones, mark your alerts, put your alerts in, and then eventually you're going to have a stockpile of alerts and supply and demand zones marked. And every single day, at some point in the day, alerts are going to go off, and you're going to look at your note, you're going to pull a chart up, and you're going to go, oh, I should go short right here. My stop should be right here. Where's my most likely target going to be? Oh, it's going to be, and you'll pick your target out. That's how you trade without emotion, and that's how you make profitable trades over and over again. Will you ever have losers? Of course you will. But you're going to have many more winners than losers, and your winners are going to be bigger than your losers. That's how you make consistent profits. So thanks, guys. I really appreciate you joining me, and I'll be seeing you tomorrow, but we'll be talking in the room throughout the day. Okay, have a good one. Bye-bye.